Since 2018, there have been several acquisitions of private mortgage lending companies, and the M&A activity has continued through early 2022. In this video, I'll explain why private lenders are getting acquired, the various types of acquisitions, how it affects real estate investors, and why it matters to everyone involved in private mortgage transactions. I'm Rocky Butani, founder of PrivateLenderLink.com, where investors and brokers can easily find direct private lending companies. If you're in the investment real estate business and want to gain insights into private mortgage lending, subscribe to our channel and get notified every time we release a new video. There are several types of private lending companies in the United States, each with different business models and capital sources. Some focus on commercial real estate, some only fund residential fix and flip projects, others only do multifamily value add projects. Many now offer long-term loans for rental properties. Regardless of the loan program, the lenders getting acquired are the ones that fund loans secured by residential investment properties and have a primary business model to sell those loans to the institutional secondary market, which includes private equity firms, hedge funds, real estate investment trusts, and commercial banks. These institutional loan buyers are the firms which are acquiring private lending companies. The reason for the acquisitions is that private mortgages have performed so well over the past few years with high returns and relatively low risk. Once the institutional loan buyers have experienced a lot of success buying from a private lending firm, an acquisition makes sense because they can have all the loans being originated by the lender and not have to compete with other secondary market players who also want those loans. The majority of lenders that are being acquired are large operations with loan volumes more than $500 million per year. Here are a few examples. One of the first in our industry was the acquisition of Genesis Capital by Goldman Sachs in early 2018. In 2019, Redwood Trust acquired 5 Arch Funding for $50 million, and several months later acquired CoreVest for $490 million. In February 2021, Pacific Western Bank acquired Civic Financial Services. In July 2021, MFA Financial acquired Lima One Capital. And in November 2021, Anchor Loans was acquired by Pretium Partners for $1.5 billion. It's not only the large private lending shops that are getting bought out. A mid-sized lender in New Jersey was recently acquired by a private equity firm, which is not an institutional loan buyer. The PE firm invests in companies and helps them grow, and they want to acquire several more lenders that have a solid operation and annual loan volumes between $50 and $100 million. Their plan is to efficiently manage multiple lending shops under one roof and eventually obtain the best pricing on loan sales to the secondary market. I have a relationship with a national private lending firm that is looking to acquire loan originators with a minimum annual loan volume of just $30 million. Their strategy is to leverage smaller origination shops to build up their own volume. And the company being acquired does not have to be a direct lender with a large balance sheet. It could be a brokerage firm that would continue to operate with access to growth capital, warehouse lines, technology, back office support, and more. So how does all the M&A activity in private lending affect your business, and why should you care? If you're a real estate investor or a mortgage broker, the acquisitions by large institutional capital firms means you'll continue to have lots of competitive options for financing real estate deals. Institutional capital is the main reason that private mortgage rates started to drop in 2016, and the acquisitions indicate that much more capital is committed to the space. If you're a private lender that doesn't sell loans to the institutional secondary market, the acquisitions may not affect your business. You've likely already felt the competition from the national private lenders over the past several years, and perhaps your business is still prospering regardless. When the capital markets put a pause on purchasing private mortgages in 2020, many non-institutional lenders were cheering the demise of the Wall Street-backed lenders. However, the recent acquisitions means that your competitors now have much more capital to grow and will likely continue to thrive. If you found the content in this video to be useful, please click the like button and be sure to check out our other videos about private mortgage lending. Thank you for watching, and see you in the next video.